Welcome back to Investing Talk podcast. Today, we're taking a close look at SINTX Technologies. That's a U.S.-based company working with advanced ceramics, specifically silicon nitride, for medical devices.
That's right.
And our goal today is really to get a handle on what SINTX is all about. We're looking at a company analysis, a due diligence report, and a strategy update, all pretty recent, from May 13th, 2025. We want to understand their recent moves and, what the future might hold for them in this medical device space.
Okay.
So let's start with the basics. What is their main focus?
Well, at its core, SINTX is all about the R&D and commercialization of medical devices made with silicon nitride.
Silicon nitride. Okay, this sounds advanced. Why this material? What's special about it for medical use?
It has some really interesting properties. I mean, it's incredibly hard. It resists abrasion and corrosion really well. But crucially, for medicine, it's biocompatible. And it even shows antipathogenic properties.
Antipathogenic. So it actually fights off microbes.
Sort of, yeah. It discourages them, which you can imagine for anything implanted in the body. That's a massive potential benefit. Resisting infection is, well, it's paramount.
Absolutely. That makes it sound very promising. And are they just using it in one specific way? Or?
They seem quite versatile. The sources mention different forms: solid, porous, even powder.
Okay.
Plus coatings, composites. They even mention working with polymers like PEEK and PEEK alongside it.
So a lot of flexibility in application. And they're actually making this stuff, not just designing.
Correct. They have a manufacturing facility in Salt Lake City, and importantly, it's FDA registered and ISO 13485 certified.
So those are the big quality standards for medical devices, right?
Exactly. It shows they're serious about meeting regulatory requirements for production, not just a lab operation.
And they have some history here. I think the sources mentioned actual use in patients.
They do. Apparently, their silicon nitride tech has been used in human implants going back to around 2008.
Wow. Okay, so that's, over 15 years of track record?
It lends some credibility, definitely. Real-world experience.
And they're still pushing the science forward. There was something about a new patent.
Yes, a recent one. U.S. patent number, ending in 761. It covers new methods for adhering silicon nitride to other biomaterials.
And why is that important? Better adhesion means?
It could mean improved biocompatibility, maybe even enhancing that infection resistance further, making the implants potentially safer and more effective.
Got it. Okay, so that's the core tech. Now, strategically, they haven't been idle. What have been the big recent moves?
A really key one was back in February 2025. They sold off a subsidiary called Technology Assessment and Transfer, or TANT, sold it to a company called Tethon.
Okay, selling off a piece of the business. What did that achieve for them?
Financially, it looks like it reduced their corporate liabilities by about $750,000 immediately.
That's helpful.
And maybe more importantly, long-term, it's expected to cut their annual operating expenses by over $1.7 million.
Ooh, that's a significant saving on running costs. So cleaning up the balance sheet and reducing ongoing expenses. What was the thinking behind that sale? Why sell TANT?
The stated reason, the strategic rationale, was to really double down and focus exclusively on the medical device market.
Okay, so getting rid of distractions maybe?
Essentially, yes. Concentrating all their efforts and capital on their core competency. Silicon nitride for medical applications.
Makes sense. Sharpening the focus. And there were also changes higher up in the boardroom.
That's right. In early April 2025, some shifts on the board of directors. The longtime chairman, Dr. B. Sunny Ball, retired.
Okay.
And the current CEO, Eric Olson, he stepped into the chairman role as well.
So CEO and chairman now combined.
Yes. And alongside that, they brought in 5 new directors. The key thing here is that these new directors apparently have extensive experience specifically in the medical device industry.
That sounds very deliberate. Bringing in that specific industry know-how ties right back into that strategic focus, doesn't it?
It really does. It signals a strong commitment to navigating and succeeding in that specific market. You'd expect this new board to be pushing hard on commercialization, partnerships, navigating the FDA hurdles.
Right, practicalities of the medical device world. Okay, let's pivot to the numbers. How is SINTX doing financially based on these recent reports?
Well, looking at the first quarter of 2025, the one ending March 31st, they're expected to report revenue around $725,000.
$725,000. How does that compare?
It's up a bit, about 5.5% higher than the $687,000 they did in the same quarter last year.
So some growth, but still fairly small revenue overall?
Exactly. Modest growth, relatively low base. And importantly, they're still expected to post a loss. The EKS, earnings per share projection, is around negative $0.75 for that quarter.
Still in the red then, which explains the PE ratio.
Yeah, the price-to-earnings ratio is negative, around a negative 1.05x for the fiscal year 2025, because of those ongoing losses. It doesn't tell you much in this situation.
But that subsidiary sale we talked about, that must have helped the financial picture somewhat.
It certainly improved flexibility, reduced liabilities, as you said. And those expected operating expense cuts, over $1.7 million annually, that points towards better cost control. It's a step towards potentially improving profitability down the line.
Okay, managing costs. What about the price-to-book ratio? The source mentioned it was a bit high.
It is, yeah, around 4.47x. A PB ratio like that, especially for a company not currently profitable, often suggests the market is pricing in future growth.
So investors are betting on the potential, even if the current earnings aren't there yet.
That seems to be the interpretation. Expectations for future success are baked into the current valuation relative to its assets.
And probably no surprise for a company like this, but no dividends for shareholders.
Correct. Typical for an early-stage tech company, they're reinvesting any capital they have back into R&D and growth efforts, not paying it out.
Right. Now here's an interesting part. Despite those losses and relatively low revenue, what's the general feeling among analysts looking at the company?
It's surprisingly positive, actually. Even with that expected Q1 loss, the average analyst rating is a buy.
A buy.
Yes. And looking closer, there's one strong buy, one hold, and importantly, 0 sell ratings mentioned in our sources.
Wow, okay, so the professionals watching the stock are optimistic. Does that translate into their price targets?
It absolutely does. The median price target from Wall Street is cited as being around $30 per share.
$30 compared to, what was the recent trading price?
Around $2.53 according to the source material.
Okay, so $2.53 versus a $30 target. That's a massive perceived upside. Analysts see huge potential here.
A significant gap, definitely. It implies a strong belief in their technology, their focused strategy, or perhaps market adoption down the road.
What do you think underpins that optimism? Is it purely the tech?
It's likely a combination. The uniqueness of the silicon nitride properties, especially the anti-infective angle, is compelling. The strategic focus helps clarify the story. And perhaps there's an expectation of hitting key commercial milestones or securing partnerships.
Right. It's not just a lab project anymore, given the history and the FDA registration. Who are they up against, though, competition-wise?
Well, the field of advanced ceramics for medical use isn't empty. The sources suggest likely competitors include names like Corstech.
Okay, I've heard of them. They're pretty broad, right?
Yes, Corstech has a wide portfolio, including ceramics for orthopedic implants. Another one mentioned is Kyocera Corporation.
A big multinational.
Huge, with extensive R&D capabilities across many areas, including ceramics.
So SINTX is competing against some large established players. What's their angle? Their competitive advantage?
It seems to boil down to specialization. Their intense focus just on medical-grade silicon nitride. And that point about being the only FDA-registered producer of implantable silicon nitride ceramics, that could be a crucial differentiator.
A unique position in that specific niche.
Okay.
So looking forward then, what are the big opportunities and what are the main risks we should keep in mind?
On the opportunity side, continued commercialization is key. Getting those bioceramic technologies into more devices, more procedures. The focus strategy itself is an opportunity allowing them to really target markets like spine surgery, other orthopedics, where infection is a major concern.
Makes sense.
And that recent patent strengthens their IP position, creating barriers for competitors wanting to copy their specific methods.
So potential for growth in targeted areas, backed by IP. What about the flip side? The risks?
Well, the most obvious risk is the continued unprofitability. They need to find a path to consistent positive earnings. That's fundamental.
Of course.
Then there are the standard hurdles in this industry, regulatory approvals. Getting new medical devices cleared by the FDA and other bodies is always complex and time-consuming.
Never straightforward.
And competition remains a risk. Those larger players like Corstech and Kyocera have deeper pockets and broader reach. Plus, SINTX is still relatively small. The sources mention around 20 employees.
Only
Yeah. Scaling up operations quickly could be a challenge without significant partnerships or needing more capital.
Okay, that puts things into perspective. So, wrapping up our initial look at SINTX technologies, what's the picture? We have a company deeply specialized in silicon nitride for medical use, a unique material focus.
Definitely, with some interesting properties, particularly against infection.
They've made clear strategic moves selling off a subsidiary, changing the board to sharpen that medical device focus.
Streamlining operations, bringing in relevant expertise.
Financially, they're still working towards profitability, showing modest revenue growth but ongoing losses.
Yet, analyst sentiment is quite positive, with price targets suggesting significant upside potential compared to where the stock has been trading.
It really creates an interesting tension, doesn't it? This gap between the current financials and that future potential seen by analysts.
It does, and it really leads you, the listener, to think about what factors are going to be most critical here. What does SINTX need to do to bridge that gap, to actually realize the kind of growth the analysts seem to expect?
Good question. Things to watch would be, upcoming quarterly results, obviously.
Absolutely. Any news on product commercialization successes, new partnerships perhaps, and definitely any movement on the regulatory front? Those will likely be the key signals.
Right. So keep an eye on those developments. Well, you found this exploration valuable. We'd appreciate it if you'd subscribe, like, and maybe leave a comment. Let us know what you think or what other companies or topics you'd like us to look into next time on Investing Talk Podcast.